Welcome to Real Estate 360 with real estate expert Kenn Renner. Ken, welcome back. It's good to see you, and I'm glad you're feeling much better than you were last month, which prevented us from getting together.
I know, Sandy. I know. I got a little Delta variant vacation, so it wasn't too much fun, but made it through and didn't get in my chest. Just very fatigued and lost my taste and my smell for a couple days. But the whole family got it. Whole family's over it. So I'm glad to be here. I'm glad I'm happy and healthy and back in the saddle again. So clients, if you were expecting me to get you something, I had a little bit of a setback with the health, but I'm feeling really good now and having a lot of fun.
But you know what? Even with you being not feeling well, the housing market continues. It didn't stop because Kenn Renner was sick.
No, it didn't, and it just kept on going. But I think it is kind of a sign of the times with what's going on with the market. We are seeing a little bit of a slowing here in Austin, and that hasn't been in my podcast for 2 years, has it been?
No, it hasn't.
And it's good because it needed to slow down because it was just going crazy when the stats that came out with the Statesmen, American Statesmen came out and said they had 2,400 homes that had people bid and won that paid over $100,000 over asking price. 2,400 homes.
Do the math on that for me real quick.
It's $2.4 billion of overage that people paid just in the last 6 months to get a house here in Austin. Now that's only if they were bidding over $100,000. I had a client that bid almost $300,000 and didn't get the property. So just the numbers are still amazingly crazy, but they are starting to calm down and starting to make it a little bit more reasonable for people trying to get properties. And that's it's been a real challenge.
How long do you think it'll take? I mean, how long do you think this will continue, the cooling off period, if you will?
Well, we're still under a month's supply of homes in the Tri-County areas. I mean, Williams and Travis Hayes. So we're still under a month. The average, the normal is 6.5 months. We're far. We haven't had it's been less than 3 months supply since 2014. So people keep moving here. People still taking these jobs. They're working remotely. And one of the benefits has been to a lot of our investors is the rental market's going crazy. I mean, we're seeing maybe 20% increase in rentals amounts than we were seeing last year, and there's like feeding frenzies going on. There's people fighting over them and offering all kinds of things. And I asked one of my property managers, Mike Ebert. So what do you test that? Why are people? Why is the rental market so hot? Mm-hmm. And of course that plays in really well for us is because he goes, they've been made 3 or 4 houses, maybe 7 bids on houses. They weren't able to get them. They're trying to move here. They can rent one of our houses and in 3 days, run their credit. They're in. So making it easy, brand new house or what have you. So it's making it easy, and so that's why we're seeing a lot of activity. We saw 27 applications in one day on one property.
Wow.
So yeah, so we're having fun, and that's what I was talking about earlier before the show. Is that what I've been preaching and teaching my investors the last 30, 40 years is working, and especially this last year. And too bad of all the stuff that happened. Unfortunately, people that have to deal with their job losses or even worse yet, major health issues or even worse losses. God bless them because, I've been through it, and I'm glad to see that we're back. The economy's still chugging right along. And so we're having fun because it's working. Right?
Well, of course, when things work, it's always fun. I say that about a lot of things, especially like technology and things like that. I love it when it works, right?
Yeah, and so...
I love it when a plan comes together.
Yeah, and so a lot of people follow what I do because I've been really good at predicting markets. Now, I didn't predict we were going up 47% in 1 year. I mean, I figured we'd get to 10, 12%. I mean, what happened was unprecedented. I mean, if you think about 50% in 1 year, average appreciation in Central Texas is 5% per year. That's 10 years of appreciation in 1 year. Now, but that's been a huge blessing to our not only our investor clients, like for instance, the areas that we bought 12 houses in Caseta Ranch in Hayes County. I mean, that's lower priced area, but those houses each went up $100,000 since January, and most of them haven't even closed on them yet. Just those 12 houses alone, up $100,000. That's $1.2 million created for my clients in that one subdivision alone. This is real numbers, and so I'm really excited that people took action and that they moved forward, and that we're still at the forefront of finding the great areas and where we're purchasing. So, we're going to go over the stats real quick. We missed them back in June. Travis County up 42% from the previous year, which is an amazing clip. 0.7 months of supply. Williamson County up 47%, almost 50%.
Wow.
I mean, these are houses. I mean, I have a house in Williamson County. It's worth about $500,000 last year. It's now worth $750,000. I mean, that's a clip.
That's your equity's going up faster than most people make in a year. Yeah.
And so, you know, I mean, and then if you have multiples, it just becomes a real fun. So we're having fun. That's the motto of my company, as you know, is having fun making dreams come true through real estate and homeownership.
Right.
So, then we got Hayes County down Buda Kyle south. We have 37% appreciation, still an amazing clip. And believe it or not, you wouldn't believe this, but $395 is the median price now for Hayes County.
Hey, good for Hayes County. They've come a long way. Yeah, well, they've come a long way.
Yeah, that's where Caseta Ranch is. So
right.
It's one of the areas that just was the focal point. All right, we'll get into July real quick. Travis County up 34%, and that's where we're starting to see the slowdown because the real run-up was in the last 12 months from about this time last year to about now. We're going to see these numbers start to come down because our appreciation level started to level out a bit. And so that I predicted the housing shortage.
Right.
We were back in a year, August last year. I said, there's no way they're going to be able to build all these houses. There's not enough materials.
Right.
And that drove up prices. And I predicted the boom. I predicted the wave of people coming in from the West Coast. I didn't know what the reason was going to be, whether it was going to be a big earthquake or a pandemic or just overall economy.
Or just had enough of it.
I just had enough of it.
Yeah.
But that wasn't hard to predict because it was after spending many, many months out there, I saw there was a quiet desperation of people having to spend $2 million on a house.
Right.
And having to work 2 incomes and then stuck in a 3-bedroom, 1-bedroom house that their whole family and their 2 dogs have to live in because they can't work remote, or they had to work remotely. So yeah, we're looking at rent wars right now. We're seeing 20% higher than last year. So I'm just really excited about that going up. Oh, and less than a week usually they get rented. So our investors are having fun with that. And that's the kind of thing is they're like, biggest concern is how long will the house remain vacant? Median price in the United States is $360,000. Austin, Travis County is $551,000. So we're quite a bit higher than the median. We used to be below the median up until last year.
The national median's going up too, obviously.
The national median's gone up about 15 to 20% last year. 18%, like that, and that is a fast clip in its own right too. And one of the things I was going to bring up on that was the fact that our submarkets, which are 50 miles north, 50 miles south, that we've been working right of the I-35 corridor, and even out west and out east, they're maybe a half an hour or 45-minute commute to Austin, but they're 50% of prices.
Oh,
half. So a lot of our properties that we're closing right now from Waco, Temple, Belton, Colleen, even outside of Pflugerville, Elgin, South Austin. We're still seeing stuff at sub 300,000, and in our markets in San Antonio, we're seeing properties that were under or close to the $200,000 mark. Still to this day, 220, 210.
So it's still good, cooling, but good.
Great. Well, I mean, San Antonio had 18% appreciation last year, so that's not bad either. What's happening is the wave. People can't afford Austin anymore, so they spread out.
Yeah.
And so so we're also looking at areas that people can commute to Tesla, which would be Caldwell County, Hayes County, and Bastrop County, which is a very tight market too as well, because the average employment income for that, which is going to open this year, is $50,000 a year, that's fine, but that's not enough to afford a medium price house or even very, very hard to afford a starter home.
Right.
And that's going to bode well for our investors because they're going to be able to rent these houses for these Tesla employees. So I do want to talk about the windfall that everybody's had. When I started selling homes back here in the early 90s, I started investing in the late 80s here. I found that first-time home buyers could barely get in, even way back then. And now they're really having a tough time. But when they sold their homes in a few years, they usually came out with some equity or enough to buy the next house. Now, but sometimes they broke even or whatever because they didn't put much down. Now everybody's got equity. The prices, the value's gone up, depending on the price point, $100,000, $200,000, $500,000 in value. It's time for some of these people, some of our residents been here for a while, they're starting to think about cashing out. And there's proper ways to cash out of your property, whether it be a primary residence or you're selling investment properties. You want to do it right, and you want to get with a real estate broker, an investment expert that's able to talk about the and inform you of the tax get you professional tax advice from CPAs and also legal advice from attorneys. So I can hook you up. That's part of our whole team to talk about the taxable advantage. So if you are selling a home that has gone up $500,000 and you're married and you now have this $500,000 profit, if you've been there for 2 out of the last 5 years, that is now 100% tax-free.
Right.
Now, I don't know what's going to happen with the laws moving forward, but that's what it is now.
Right.
And so, it's just great seeing some of these blessings that people are walking away. Now, we're all seeing the people that are investing that they want to now take advantage of it. And so a lot of our investors are now doubling down and maybe going to our submarkets where the homes are 50% less or at half the price of Austin. They've got all this equity. The rents aren't keeping up with the tax increases and property taxes. And so they're like, well, where do I get a better return? And that's where our expert advice comes in. Is we target better returns, both appreciation and the cash flow. So you could do a 1031 tax deferred exchange, which allows you to. We've had many people from California sell one house and buy 8 or 9 houses here.
Right.
But now even locally, because of the run up in values, then you could still sell your house, maybe buy 2 or 3. Sell your rental house, make your $500,000 and put a couple $100,000 down on several houses. And totally cash flow and maximize the amount of equity buildup, because the more property you own as the values go up.
Makes sense.
Yeah. So, are we turning the corner as far as a housing bubble? No, we still don't have. We're still 4 million homes short in the United States to handle the millennial generation that's moving in. Could we see a slowdown? We're starting to see the softening of the market, which is good. People can catch a breath and actually be able to get a property. Is it still a good time to buy and to invest? Primary residence and even rentals, in Austin is still a good place to invest. Our submarkets are actually on fire. And so if you want more information, you can book an appointment with me. Call Ken.
Right.
I know you should have done this last year, Sandy. You could have done it last year.
I could have.
I saw this coming.
Yeah.
So,
I had my hands pretty full with properties, actually.
Yeah, and all your new syndication.
Yep, all of our syndication and radio stations across the country. Now I've got 18 different cities across America that hear the Sandy Show and the podcast and all that stuff. But most importantly, I'm glad that you're feeling better.
Thank you.
And up and moving around and helping people out.
Yeah, we're helping people out.
Having fun.
And we're having fun in the process.
Good seeing you.
Right, thanks, Sandy. Appreciate it.